In this video, you will learn 1. How I finally broke through from losses on synthetic indices. I'll be telling you everything I did when trading was hard until I finally broke out to start making profits from synthetic indices. 2. I'll be teaching you guys the trading strategy I used to break out from losses and start making profits in the market. This strategy is what helped me to break out from losses and started giving me my first profits in synthetic indices. And if you use it well, you will also be getting the same results from the chart. And 3, I'll be teaching you the psychology I used to make profits with synthetic indices. Everything that I've experienced throughout these years of trading synthetic indices, I'll be teaching you guys all in this video. Now, let's get to it. Alright guys, so there are a lot of things that I want to teach you guys in this video. I started trading Deriv not very long from now, let's say like 4 years ago. And I have to tell you the truth, when I started, it was so hard. Trading was so hard until I discovered some of these things and this strategy that I'm going to teach you in this video. Now, the reason why trading is very hard is because a lot of people see trading as though it is something that is a magical something. Like many times when they see profitable traders make money in trading, they think it's luck, but it is not luck. This stuff is something that keeps repeating itself every day in the market. And the problem that a lot of traders face with all these trading strategies and all of that is because the market will not keep giving you the same pattern all the time. That's why you have to take your time. Even if it is the easiest trading strategy in the market, you have to take your time to really learn it. Take your time to experience it and take your time to practice it on the chart. A lot of traders will see a new trading strategy and they will just jump into the chart. They will start trading it on their demo accounts. That is the ones that are very, very reasonable. The other ones will just jump into a live trading account. And that is very, very bad. That is a very wrong way of trading the market. If you learn anything in the market, you have to give it time. Give it at least 1 month of training with it before you start using it on your real account. But this trading strategy that I'm going to teach you in this video is also very simple, and you can even start using it today. But it is also very advisable that you take your time to learn it. Take your time to really understand what I'm going to be teaching you guys. Now, the first thing is the trend. If you want to really be profitable in anything in the market, you have to first of all understand the trend. If you don't understand the trend, every other thing is nothing. If the trend is not correct, even if you are using the best trading strategy in the market, it won't still work out. So you need to first of all get the trend right. And a lot of people don't even know how to even get this trend right. Now, if you want to get the trend, it's very, very simple. There are 3 things that determines a trend. 3 things. Like if you are going for a downtrend, for example, let me use a box for this illustration. So now, if you're looking for a downtrend, the first thing that you need is this point here. You see where my box is at? That's the first point that you need. The second one is this. So this first one here, this is now on the high. Now this second one is the low. You get me? So first of all, the market gave us a high, then it gave us a low. Now the next thing you need is this point here. This one here. That point there is now the lower high, and that will now give us the 4th point. This 4th area here. So this area is now the lower low. Now the reason why this area is like that, let me draw it this line here. If you have been trading for some time, you know what a break of structure is. A break of structure. So you can see that at this point the market broke this structure here. That my trend line may not be correct, but just bear with me. The market broke this structure here. So when it broke the structure, it now gave us a lower low. Now remember I said this is a downtrend, right? So the first one is the high, the second one is the low. Now the third one is the lower high. That means it is a high, but it's now lower than this first one. Now this one is one of the things that determines that the market is going to move to the downtrend. And after the break of structure here, this break of structure here, we now get this, and this becomes our lower low. Now when you have these four things already, you can now trade this market as a downtrend. If you're the type of person that use trend line, you can now draw your trend line like something like this. I will show you guys an example for a downtrend. So you can now draw this your trend line like this, and when you draw this trend line, anything you get to the trend line becomes your signal. But today we are not going to be talking about trend line. I'll be teaching you a trading strategy that after I started using it, trading becomes so easy for me, and I'll be teaching you guys in this video. Now this is a downtrend. Let me show you what an uptrend look like when it's starting to form. So this one I showed you guys here is the beginning of a downtrend. All these four scenarios here, this one, this is what determines the beginning of a downtrend. We can have more lower lows and lower highs when it's going down, but this is what determines the beginning of a downtrend. Now let me show you that for an uptrend. So here we have a low. This is the beginning of an uptrend. This is the beginning of an uptrend. And now right here we have a high. So this is a new high because this was a low, this was a high. Now right now we have this higher low. You can see that this movement is kind of like trying to move like a downtrend, but this time around it is not moving below this first one here. So this one now becomes our higher low. And now for it to be completed, we need one more movement in the market, and that is where we get this point here. And now this point had to break this structure. So now this one is the first, this one is the second, this one the third, and this one is the fourth. And it is only possible when this high is broken. Look at look at this first high. It is when it is broken that we can now have a complete uptrend setup. So you can now trade any strategy that you like after this uptrend has formed. But first of all, you need the uptrend to form. So that is the number one thing. If the uptrend will not form or the downtrend don't form, you cannot trade any other trading setup in the market, and that is the fact. And so now that you know how to get your trend right, I'm going to teach you a trading strategy that I call the trend liquidity takeout. And this trend liquidity takeout is, can I say, one of the most easiest trading strategy that I've ever encountered in the market. And I'm so happy that we can use it on Deriv synthetic indices. It works greatly on Deriv synthetic indices. So let me show you guys what this strategy entails. So like I told you guys, what we have here now is an uptrend. Look at this. So here we have the first, we have the second here, then all right, we have the third here, then we have the fourth. So our setup is completed. What we are now looking out for is the market moving further. So now, when we have those points completed, we want to start looking out for the liquidity trend takeout. Now, this takeout, how it works is that when you have a retracement, like this one that happened here, this retracement, and the market now moved high and broke this high structure, this higher high structure. So it has broken this structure here. So what you are looking out for is that when the markets come down to this point, the market should take out this last low here. You get the point. So the market should take out this last low here and give us a pin bar. So we need a pin bar for this to work. Is the pin bar that we're going to use to make this work, because this pin bar shows us a huge decline from the side of the buyers. So the sellers trying to move the market down, but the buyers have already taken over. So this pin bar gives us the direction of the market. So now when the market moves down here, goes up, broke this structure, and then come back to this place, to this lower, to this higher low here, then it now give us a pin bar. That is our go ahead to enter the market. And look at what the market did after this pin bar. It started going up. So if you took this trade, it would have been a very good trade. Now, the same thing happened here again. So after the market broke this last one, this last higher high, look at the market broke it. The market broke this last higher high here. Then the market came back to this lower high, higher, to this higher low, and then it gave us a pin bar again. So when we have this pin bar, then it is time to enter the market. So you will enter the market after seeing a pin bar on the higher low, because here we are dealing with an uptrend, and that will be your signal for the trade. And after you have encountered this pin bar as your signal, you can take a trade, placing your take profit at the top here. Like for example, let me show you guys. So let's use this limit for example. Why I like using this limit is because it gives you that simulation like you are in a trend, like you are in a trade. So it's a limit order, guys, for those of you who don't know. So when you trade a market like this, you know you are going to enter the trade after seeing the pin bar. So when you enter the trade, place your stop loss below that pin bar and place your take profit target at the top. Don't place it anywhere lower or anywhere higher. Just place it at the top there, at that last higher high. That is where you're going to take your profits. Now, let me show you guys another example of this. So right here, you can see that the market is moving in a downtrend. How do you know that? Because you see the market moving. Look at the lower low here. Look at the lower high, lower low, lower high. It's going down. Now, what you want to look out for is the trend liquidity takeout. You need the market to take out a retracement, a formal retracement. So now, if you place your line here, what you are looking out for is for the market to return to that line. But when it returns to the line, you need a pin bar. This pin bar shows a strong rejection from the opposite side. Like if you are trading and you want to sell the market, like for example, now that we are in a downtrend, What you are looking out for is a pin bar. Why? Because a pin bar gives us that strong rejection from the side of the sellers. So the buyers trying to move it up, but the sellers brought it down, and that gave us a pin bar. That means that we are going to take this trade. So now, if you encounter something like this is a good opportunity for you to trade the market. Like I say, this strategy is very, very simple, but you need to at least test it by yourself first before you start using it on your real accounts. If you are new to Deriv, you can register your new account with a link in the description box below so that you get some bonus from the broker, and you can fund your account and start trading. But when you want to trade, make sure you know what you are doing. So now, right here we have the pin bar. So this pin bar here is our pin bar. So let's imagine that we are trading this setup. So we now place our limit order, put our SL above that pin bar, just above the pin bar. Then we'll place our take profit target here. So that is how we are going to be risking the market. If you want to risk, you can risk with any amount that is suitable for your lot size. Any amount that is suitable for your lot size. It could be any amount at all. You can risk $25, just like you can risk as much as $25, $100, $200, $1,000 according to your risk, according to your risk appetite. And if you look at this now, you can see that this is not one of those 1:2 trading setup. No, I don't teach that 1:2 trading setup in the market. What I teach you is 1:6, 1:7, something that will be really worth your capital. If a trading setup is 1:2, you don't need that setup. That setup is not for you, because each time you lose, you're going to lose half of that profit. So it's very, very bad. If you want to make money in the market, you need setups that will have a high ratio, very, very high ratio. I'm talking about 7, 6, 10, like 1:7, 1:6, 1:10, 1:12. These are the kind of setup that you look out for. 1:5 is also great. But if you do this 1:2 something, anytime you lose, you are already losing half of that your profit. And let's say you make another loss again, you have lost all the profit. And then you start looking for another 1:2. And you wonder why many traders are stuck in this trading circle. They keep going from one point to another, but it's like they are circling something. They are never breaking out from one level in the market. And that is very, very bad. So guys, you need your risk ratio to be very, very strong, and this trading strategy will do it for you. Now, like I said before, go to your charts, go and back test it before you start trading them on your real account. Now, if you want to join us in our VIP signal, where we drop high quality signals every day, like I told you guys, I don't do 1:2. I do from 1:5, 1:6, 7, 10, 12. These are the kind of setup that I give you guys in the signal group. So if you want to join us, the link is in the description box below, and it's very, very affordable. So if you are new and you're completely new to Deriv synthetic trading, all you have to do is register your new account using the link in the description box below, and I will see you guys in the next video.